About this over the weekend at great length and detail. Again, there's a problem with the rally. We got above the 20, we got above the 50. But the problem is the 20 is still below the 50 at this point. Okay? And momentum is not confirming the push above the 50 period. We're still in the negative region. We got green, but we're still in the negative region. Just like when we had the peak in July, we dropped down below the 20 and the 50. We went in the negative region. We got green, but we remained, and we got back above the 20 and the 50, but we remained in the negative region. That's not supposed to happen. You're supposed to be, if you get above the 50 period, you're supposed to be in positive territory. You're in a new uptrend. That's not happening. Now, it may happen later. If we continue to go higher, then we might form a divergence and get a reversal. We might go up again to the 5,300 area and then begin to turn, and it might form a reversal signal. That's possible. If it does go into positive territory, you're going to likely set up a lower high and a negative divergence, which again very well could give us a double top, as I've talked about. A relief rally, again, we're likely going to try to exceed 52.65 and go up to the low 5,300 area, the low to mid or 5,300 area, something like that, and get a double top. In 2022, we went higher and we got a divergence here and slightly above the peak previously made in late 2021. It's possible we see the same thing here. So again, get a relief rally with the inflation data, that's possible. If we turn, be watching the trend line and the 20-week moving average. Do they break? Do they hold? Please support the channel with the link directly below that allows me to be able to provide you this information. If you follow the link, it'll take you to a secured site. You can donate any amount you want, recurring donation, but please consider helping out today. I do need your help. I don't have any sponsors because I don't want to sell you things. I ask that you help out and do what you can. So please consider helping out today. I thank you for your consideration for that. Again, I talked to you over here about the double top pattern. And again, we could be forming a larger one if we end up going to a new high, if we get a relief rally, and if we sell off and then get a higher low and go back up and hit the highs. But again, I told you back on April 19th, we hit that 20-week moving average. I told you that might be a bottom, and we might go to try to fill the gap or make a new high. We have filled the gap. That was on April 19th. On April 26th, I told you we had a bullish reversal of conditions, shifting momentum. Then we've seen swing trend signals all turn back to bullish. Again, we'll be watching the gaps. We'll be watching the 10 and the 20 period. The 10 is now getting above the 50. The 20 is still below it. Stochastic's trying to roll over here. Do we get a pullback, or can the momentum continue up to the upper channel line just above this high at 5,300? Again, the peak over here is at 52.65. At above the 50, the awesome oscillator's in positive territory. If we start seeing red, we can turn down. If we remain green, LCD histogram did tick down today, so I'll be watching to see if we get a red bar or not tomorrow on the awesome oscillator. Again, do we get a relief rally with the inflation data? Maybe gives us a double top at the 5,300 area, or do we start to turn down, make a move to go back and fill these gaps, and we get an inflation sell-off, maybe with Powell? So I'll be watching 200 on the 5-minute chart. We'll likely have a gap either up or down tomorrow. We're right at the 200 on the 5-minute, either gapping here, bouncing off of it, or gapping below it. The chart looks identical to the S&P 500 here with the NASDAQ daily chart. Again, I'll be watching to see if we get any kind of red bars with the awesome oscillator. Do we turn, or do we go up and try to fill the gap? Do we go up and try to fill the gap directly overhead? And if so, do we challenge that high? Do we get above it or not? We form the divergences. We'll need to get a bullish reversal of conditions on the weekly time frame, and again, then we can see green bars here, and you can get your divergence that I've talked about. If we see that happen for NASDAQ, or S&P gets it but NASDAQ doesn't, we'll be watching the gap filled directly overhead. If we get a relief rally, there's a NASDAQ weekly chart here pushing up through the red dots of resistance at the moment, but not the cloud. It looks like by the end of the week. Remember, we got above the 10-week moving averages last week. The volume on the rebound back up hasn't hasn't been extremely high on the lighter side. The S&P did get above the 10-week moving average. We did get the close above the upper boundary of the candle, of the cloud here. The candle closed above it. Do we get a lower high at this 5,200 area, just overthrowing it? Or do we go up and try to form a double top and slam into that upper boundary? Showing you in just a moment. Again, that weekly chart I keep showing you that I'm watching to see if we get a lower high or a higher high. Have to get green bar here. We tried here to get it. We couldn't get it. We still ended up getting a lower high and selling off and going lower. So again, we don't have to get it, but we could if a divergence scenario tries to set up here where we do try to challenge the highs and move to the 5,300 area. S&P's at 5221. The high was at 5265. The Dow broke its winning streak. We had an 8-day winning streak. That winning streak was broken today. The Dow had initially gapped higher. We were up over 100 points and ended down 81 points, just over 0.2% lower. Today was extremely light volume. The lightest volume that we've had is the half day before Thanksgiving. Extremely light volume today. As we get Powell tomorrow, as we get the inflation data tomorrow, the PPI inflation, wholesale inflation before the market opens, and then on Wednesday, the CPI, which what everybody's really looking to is that CPI. We'll see what happens with Powell. It was pretty much flat with the S&P. The Dow was down and the nasdaq was up. And so you had a mixed bag here. S&P was down 1.25 points, pretty much flat. Closed at 5221. If we're going to get a bigger sell-off, you got to take out the 200 in the 5-minute time frame. We rested right on it there. We take that out tomorrow, that would be bearish. If we bounce off of it, that would be bullish. Get a sigh of relief with the inflation data, or will we get more misses with the inflation data or hot inflation data? Rattles the market. The NASDAQ was up 0.29%. The Russell was up just over 0.1%, and the VIX broke out. The VIX has a bullish falling wedge. It broke out of it, gapped higher, and we rose by 8.37%. I have a lot of Fed speakers this week, but we do have Powell speaking tomorrow during the market session. Powell will be speaking 10 a.m. Eastern Time. We will get the PPI inflation data before he does speak. The consensus for month over month is 0.3% for the headline number for the core, 0.2%. Year over year headline number is 2.1. Previously, I'll show you what it's going to be, what's expected here. They don't have it posted here. And the core is at 2.8 previously on a year over year basis. The headline number right here on a year over year basis, previously 2.1. Consensus is 2.2. The forecast is 2.2. So that number is supposed to be hotter than expected. The core number is previously at 2.8. It is expected to come in at that 2.8 level. So again, I've talked about these back-to-back bullish candlesticks that form the day of the Fed day right here on May 1st, and then the next day we got a bullish hammer. I told you that those were bullish candlesticks, back-to-back bullish candlesticks at the trend line of support, longer-term trend line. I talked about that at great length and detail, made a whole video about this. I told you I was still looking for a move higher to go up towards at least the 200 in the 60-minute time frame. We ended up getting that as we rose back up here, but then we exceeded that level. I told you if we did exceed the 200 period and the upper channel line that we previously had, touching this high, touching this high and this high. If we exceeded that level, we can go up and fill the gap and hit the 78.6 Fibonacci. We did that. We got a doji there, and we pulled back, couldn't reverse, no confirmation of the doji. We pushed higher. That allowed the Dow to fill its gap. We'll have a possible bear flag. We overthrew it with Friday's session with a spinning top. We tested those highs today, got a lower high, sold off, and closed flat on the S&P 500. The Dow broke its winning streak after filling the gap. So now I'm back to fill the gap. Back over here, I told you we have a possible bottom back here. April 19th, I told you just over 3 weeks ago, I told you we have a possible bottom that could give us a lower high to fill the gap or a higher high. I talked about that you that chart in nearly every single video that I've made and talked about the possibility. If we halted at this level right here, we might pull back before you fill the gap, exceed that level, we might do it immediately. So we've done it immediately. So now does it continue to that upper channel line in the weekly time frame, or do we reverse right here and start coming back and filling these gaps and testing these lows in our support zone here, our support zone, these lows here and this bottom that we had there on April 19th. So again, if we rally with the inflation data and Powell, we get a sigh of relief. 3 months of hot inflation reports comes in hot, we can turn down. Now let me just say this, sometimes you can get a cool reading or a hot reading and defy logic. CPI has done that a number of times where you get a hot number and it doesn't really show off. And right now we're getting the PPI ahead of the CPI. Usually it's the other way around. Usually you get the CPI first. This month it's just a little bit different. Watching, do we end up getting a relief rally and going up and trying to hit that upper channel and form the divergence on the RSI in the weekly time frame? Or do we set up a lower high here, begin to turn back down? But with the rally, we formed negative divergence on the 60-minute chart, could form a triple divergence if the rally tries to continue. But if the divergence plays out, we need to close back below the 78.6 Fibonacci, back below the gap fill here at this 5200 area if we're to reverse. We have in the possible bear flag, this rising wedge pattern, it has expanded, and we came up on Friday and hit that upper trend line right there, just as we were hitting the upper trend line over here with this larger rising wedge back over here. So a rising wedge into the upper boundary of the potential flag pattern. And I say potential because, again, would have to break down and then be confirmed, breaking the trend line and then moving to a new low. Those bullish candlesticks, back-to-back bullish candlesticks, they've given us a rally back up. I was looking for a rally, the upper channel liner to fill the gap. We filled the gap. We've overthrown the gap now. So now it's watching to see what happens with this doji. I was watching to see if we would close below the doji or not. We did not. We gapped higher, and then we sold off and we closed flat. So the candlestick has not been confirmed. I was watching to see if we get an evening star reversal. We did not. But we did break the winning streak on the Dow. Today, again, a very, very light volume day ahead of Powell, ahead of the inflation data. Again, as we got these bullish candlesticks and as we had this low and this low, we were bouncing up the 20-week moving average. I've talked about that. That's why I told you we may have a bottom there to go up and fill the gap or even to move to a new high. Let me just show you the chart I've been showing you over and over again, but I want to show you because we are at a place where we're either going to get a turn, fill the gap, or we're going to go on and try to make a new high above this level right here and hit that upper channel line in the weekly time frame. I've talked about this chart over and over again, even before we hit the 20-week moving average, because again, I expected us to hit the 20-week moving average because we had a gap fill down there, and I drew a channel line before we ever hit it, and hit the channel line, the lower boundary trend line of the channel, and we hit the 20-week moving average and we bounced. So I told you to be watching the 200 period on the 60-minute chart. Again, the upper boundary of that channel, if we got above that, to fill the gap here. And if we get above this level, then directly overhead, you have potentially divergence that could be completed just above 5,300 here on the RSI. If we get a relief rally, it could be something like that. And I've talked about this, that what formed at the 2022 top. We just went slightly above this level. Here we hit a high at, what was it, 52.65. So again, if you go up to the upper channel line here, you're going to go up into the low 5,300 area in all likelihood. If we get something more like the July top, you would get a lower high and we would turn back down. And if we were to take out the 20-week moving average, we can get a larger correction. The trend lines that I've been talking about, you have a trend line right here connecting these levels right here. If that trend line breaks, or if we go up here and then break it, or if we come down and make a lower high and break it, again, the risk is that we move back to the 50-week moving average in the weekly time frame, the 200-day in the daily, and this trend line right here. So again, do we go up and hit that level? Or even if we pull back a little bit and fill the gaps, we could still do it at a later date. Here we took, several weeks to do it, to November, and then we didn't get the new high until January. So it could take time, and we still may have that happen. Or again, if we break the trend line, if we start coming back and taking out the 20-week moving average, then that's going to be bearish if we can't make a new high. So this is what I've been watching and what I've been talking about. But again, I think that either a divergence or a lower high is going to set up here, which could usher in a bigger sell-off. I've shown you this chart because, again, on the S&P weekly chart here, again, the 2020 peak was a divergence. The 2022 peak was a divergence. The July 2023 peak was a lower high. So which will this be? And that's why the question mark there with now. We've been talking about this for weeks, even before we hit the 20-week moving average. I want to continue to show you this chart, and then we'll be watching. Do we get a relief rally and we go up and hit this upper channel line and form the divergence? I've already drawn the little red there just in case we do, and see the RSI make a lower high. Or do we get that lower high and begin to turn? Or do we turn down, fill the gaps, come down here to the 20-week again, and then try to bounce? And we got, just more. Here we peaked in November, sold off, tried to rally in December, and it failed. And then we ended up having it be successful to a new high in January. So do we get more choppiness in here before going up? So again, it could play out a couple of different ways. Wanted to make aware of the different scenarios that could be in play here. But again, if we hold above the 20-week moving average, price can continue to rally. If we take it out, then that is a sign of weakness. Again, will we get a relief rally with the inflation data and Powell this week? Also still have earnings, Fed speakers, or do we get an inflation sell-off? Market had priced in 7 rate cuts for 2024, and totally unrealistic. Things would had to have been really bad immediately for that to happen. Began pricing that in March. Markets corrected, adjusting itself with those probabilities, actually taking it down to 1 or none, and I'll show you what's going on right now, but it never did reprice that. Do keep that in mind here, ahead of the inflation data and Powell. We have 2 cuts now at the moment estimated, Fed Fund futures for 2024, and that to begin in September. This stuff down here is 2025. We're looking at 2024. September, 48% chance. Doesn't happen there again November. So right now, anticipation is a cut either in September or November, and then another cut in December. It's back up to 2. Had gone to none. From 7 to 6 to 5 to 4. It's hovering between 4 and 3 for a while. Went to 2 and 1, and then it went to 1 and none for quite a while. It's back to 2. See what this looks like after we get the inflation data. Powell speaking tomorrow. Now, the gap higher from last week, it gapped above this trend line right here, connecting this peak to this peak. This is a level that we overthrew, but we got a doji, and we ended up closing right back up at that level. And here, again, we gapped higher today, and we turned down to turn lower. And we completed a negative divergence with all of this. Okay, and in order for the negative divergence to play out from last Friday, we got to take out the momentum line, we got to take out the momentum cloud, we got to take out the 200 in the 5-minute time frame. Relief rally, then again, we're going to be watching the high up here. We're going to be watching this trend line now, which connects to this peak and this peak. If we get a relief rally on the inflation data, again, we could still go and make a new high and hit that upper channel line and probably move into the low 5,300 area somewhere if we end up trying to form that divergence. And that would take us up into that upper channel line and, again, likely form a little miniature double top, very similar to what we had over here, similar to the peak in 2007. If that happens, again, you had a peak here, you sold off, you came back up, and as what happened is we went just slightly above this high right here, and that was it. The market topped out. We formed a divergence. We had a little divergence here, and then we had another one here, and that gave us a double top. So do we get something similar to that? Maybe. This is a 20-week moving average. We had dropped below it here with the initial sell-off after the summer peak, but then rebounded back above it in the fall, couldn't stay above it, and then ended up dropping back below it and held below that 20 period consistently for the rest of the bear market. Again, that produced a top, and the beginning of the bear market And again, we got rejection at the 20-week. Tried to overthrow it a couple times, but again, remained consistently below it until the bear market ended. Intraday charts, again, I'll be watching. Do we get a relief rally up? Maybe tries to challenge this high. And again, peak there was 52.65. We can go up into the 5,300 range and form a double top pattern, slamming into that upper channel. And that's right where that level is in that 5,300 range in the weekly time frame that I've been talking about. If we take this level out, you got to take out the 200 period in the 5-minute time frame. Resting on it right now, and we're forming a triangle. A triangle can be a reversal. A triangle can be a continuation. I talked about the triangle over here. Again, the bouncing off of the 200 period moving average. We're doing the same thing here. If we're going to sell off, we got to take out the 200 period moving average and downward resolution of the triangle. If we bounce here and we get a relief rally with the inflation data or Powell or something, then again we can an upward resolution. And if we do, you need to hold above the 78.6 Fibonacci. And if you do that, then you can go challenge the highs. We had a couple of gaps higher, and then back here Friday we had a gap up, a pullback, and then a rally, and that gave us the doji that we had on Friday. Then here today we had a gap higher, and then we sold off down to the 50, tried to rebound, and then sold off to the 200, tried to rebound, and we just kind of closed right on that, just above that 200 period moving average. So again, you drop below the 200, the 50 drops below it, you start selling off with the inflation data or with Powell, that's going to be bearish. You take out this level that we're just above right now, and we close just right above it, right above that level. So again, this 52, 18, 19 area, you start taking this level out, closed just above it at 52.21. You start taking out the 52, 18, 19 area, this 200 period moving average. You start taking out the momentum line and the momentum cloud, which are at that same level in the 60-minute time frame. We're going down. But if you bounce off these levels, as we're trying to bounce, but again, very, very light volume, lightest volume, according to the financial media, that we've had all year. I'll be watching the 200 period as we go into tomorrow. I'll be watching futures will move up or down. I'll be watching to see, do we break the 52, 18, 19 area? And if you do, then you'll be taking out that 200 period moving average. Our stochastic rollover, but it still remains elevated. Because it rolls over doesn't mean that we're not going to still try to make new highs. Still can, as we've talked about last several weeks on that weekly chart. But again, you could just as easily make a lower high. What I'll be watching, and we still have the 20 below the 50 in a bearish arrangement. You get the 10 now trying to get back above the 50 here, but the 20 is still below it. Do we pull back and then eventually come back up to this level, break the trend line, hit this upper boundary, or we do it here and then come back down? Or do we just start selling off and break the trend line sooner rather than later? Again, the possibility of a double top if we come back up here, as we've talked about at great length and detail, hitting this upper channel line. So again, trend lines to be watching. This trend line right here and the trend line up here, connecting the peak here with the prior August peak of 2022, and that is our channel. If this trend line breaks, you're coming back to this trend line and our 400 period moving average, maybe the 200 if we find support at a higher Fibonacci retracement. But I'll be watching. Do we start to turn, or do we go up and start to turn, or do we turn but then go up after? So those are the scenarios, and it comes down to support and resistance. Support holds, then you can still go higher. If support breaks, then you're going lower. I wanted to show you these trend lines once again. Again, we did not have a divergence at this bottom. We've had this rebound back up. There's a problem. The 20 is still below the 50 period moving average. Suggesting we're going to see some type of pullback, be a reversal. NASDAQ was up 0.2% today, up about 37 points. Again, same thing here. We got that doji on Friday. If we start to turn, we bounced off this trend line. If we take it out, that's going to be bearish. Take out the 100 period moving average. We've come back up. Again, we've got the gap filled directly overhead, just directly overhead. If we try to rally, we may try to fill that this week and then turn, or you might try to push to a new high. It is Possible the S&P makes a new high and NASDAQ does not. Oftentimes they diverge. They don't have to, but sometimes they do. We've got these MACDs that turned up. Again, we talked about the bouncing here. I told you we very well could have a bottom just over 3 weeks ago. And then I told you I'd be watching the gaps. I'd be watching the channel line in the weekly time frame, and assuming that we got above the 200 period in the 60-minute time frame, we ended up doing that. But again, you did not form a divergence here. You don't have to, but you still could. And again, stay in positive territory here. Or again, is it something like what we had over here where we end up rolling back over and moving to new lows, as I've talked about? I'll be watching the trend line. I'll be watching the 20 period. It is still below the 50 period moving average. The 10 period is still below the 50 period. We may see that get back above the 50 here if we get a relief rally. Here it is on the S&P up close. Again, the trend line, the gap fill there. Again, go back to test that, or do we go up towards that upper channel line in the weekly time frame? Here it is up close, our doji from Friday, and then again we pushed up, tested that level, and then turned down and pretty much closed flat on the S&P. Check out the doji, went up, but again, tested the level but did not exceed it. But the dojis were not confirmed, and that has to happen if there's going to be a reversal with those dojis. So again, we could still go higher. No confirmed candlestick reversal today. A little bit more on the 60-minute charts. Again, if we do pull back, the support and resistance line right here, the orange line and the trend line, these are the support levels. 200 period just above it. You got these gap fills. So if we do sell off, these are the levels to be watching: the gap fill, the trend line, and the support and resistance line here. And again, this high to mid 5,000 area. If we higher, again, as I said, this trend line right here, and then also the trend line in the weekly time frame. If we go higher, again, it might be that we try to form a triple divergence. If the negative divergence here plays out, then we can get a sell-off, and again, back to these levels, and then we'll see, does the trend line break? Does the trend line hold? If we do pull back to fill the gaps. So something to be paying attention to. Support resistance line right here, currently right here, right at the 5100 area. And again, we'll be watching these levels, the gap fills, the trend line, and the support and resistance line. It was acting as support. We broke it. It's now become resistance, and then now we're back above it. So now it's back to support. So do we see momentum go negative and start turning down and start breaking the momentum line, the momentum cloud, and take out the 200 on the 5-minute chart? Or do we turn back up and get a relief rally with the inflation data, or maybe Powell? I'll be watching to see how that unfolds. But like I said, in order to turn down, got to take out that 200 period on the 5-minute chart, and we keep bouncing off of it last week and then again today. Dow broke its winning streak here, and the 60-minute chart, we filled these gaps. I talked about the gaps. And again, the Dow at the momentum cloud, we're taking out the momentum line, but we're at the momentum cloud here. Again, if the Dow starts falling, the diversion starts playing out, we can get a sell-off, and you got the gap filled down here, and we can see a sell-off. If we turn back up and get a relief rally, again, you might form triple divergence on some of these indicators here on the RSI. We have the divergence on the charts. Here it is on the NASDAQ. Again, the divergence formed. Now we got a lower high. Are we going to start turning down? Again, you've got your trend line here. You've got your cloud at your gap fills. So again, if we get a relief rally, then we'll be watching the gap fill directly overhead right here for NASDAQ. Again, at that 18,300 area. We did not fill that gap. The Dow has, the S&P has, the NASDAQ is not. So I'll be watching that level. And do we make a new high or not if we do get a relief rally on the inflation data or with Powell? Well, the S&P got a divergence on the MACD in the 60-minute time frame. It did not get it on the RSI. It got a lower high up here because this RSI went higher than the previous peak, so we got a lower high at this point. So again, you got divergences on some indicators. Got it on the RSI with the Dow and NASDAQ. Does it evolve into a triple divergence and we get a divergence here on the S&P, or do we start losing the cloud? Do we start losing the support levels here, the momentum line, the cloud? And you've got a little triangle here in the intraday time frame. Triangles can be reversal or continuation patterns. So I'll be watching what happens with the inflation data. Relief rally. We sell off on the inflation data and Powell.